Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Monday, November 21st. Bit of a quiet day to start the week. It should be overall kind of a quiet week. I think some attention is on the World Cup and of course traveling and so forth. But overall, we'll get to the themes of the day. Risk disclaimer in front of you. Everything that we are going over in this video is for information purposes only. Please read the full risk disclaimer right here. So that said, we will cover this. We will cover Disney for about 15 minutes. I'm just kidding. I mean, I think that was such a saturated story. I get it. It's kind of a low news day, but I will try to keep the video short. And that said, I will try to keep the video short and sweet and just go over a couple charts and the themes of the day. Breadth, I mean, is starting to get a little bit concerning. I think it's the third day in a row where we've seen, kind of poor breadth. I remember going back to Thursday, the breadth was really poor, but we rallied off of that and the breadth improved as the day went on. But it's starting to become an issue. And we've talked about, I don't have the new NYSE, NASI, those have been really good bullish signals that we've had in the market. And but they may be starting to turn. This is what this looked like as of the close of business on Friday, right? Starting to see this line kind of, this slope kind of come in, especially more on the NASDAQ. Right. So we might be starting to see these two lines, right? This is the 10-day moving average. We use this basically just as a proxy to tell us if there's more advancing versus declining issues, right? If the wind is at your back or at your face in terms of stock picking. And, this line is starting to come in a little bit. And if you look at today's breadth, which I should have for you right in here. So Dow, things are fine in the Dow. 18 advancing, 12 declining. S&P even had a positive breadth day, 270 versus 233. But then it gets a little bit troublesome when you get to the NASDAQ. 1150 advancing versus 1645 declining. And, the indicator that we're using, it's on the bottom left of your screen, was basically negative for the majority, was either, deep yellow or all red for the day. And again, that associates volume with advancing versus declining, up volume versus down volume. So that's our proxy for kind of, it helps me really decide if I'm going to be, trading, actively trading for the day on the long side. If it continues to be negative, then, I try not to really do all that much. The other theme, so breadth was not good. The next theme of the day, I would say we'll kind of get to this, but low volatility areas of the market. We certainly have talked a lot about this. Remember going back to, the CPI report was now about a week and a half ago. Since that report, there was a big move up in growth names after that report. However, most of them have kind of fizzled. There was and I think that was more due to short covering, traders being caught off guard when positive information hit the tape. They had heavy short positions, but once those positions got covered, right, in a lot of those growth names, things have kind of reverted back. And the areas that did see some profit taking, which were more of like the healthcare and more of the value areas, those names pulled back after the CPI report because those were a bit overcrowded. Those are now seeing that buying return back to those areas and money being put back. So that was kind of, that was our thought. That was my thought and kind of the game plan that I've given to Tribeca Trade Group members, to be looking for opportunities in things like healthcare and things like steel names, which outperformed quite nicely today. Even a little bit in energy. We could talk a little bit about that. Maybe, why don't we start with energy, do something a little bit different. So here's what happened with crude today. So maybe this kind of shook out some of, I do view energy as a bit overcrowded at this point. It's kind of been a hiding place, at this point in time. And to see, there was a headline that drove crude down. It was already going down, but once that headline came out about I think it was the Saudis talking about increasing production, that drove crude down further and took out the lows from Friday. But then later they said that was not a correct report, and you could see you had a pretty nice reversal in crude. So if you look at these energy, again, maybe this kind of shook out some weak hands. Look at the VPOC takeout here in XLE, right? So I tend to look at, when there's a lot of things moving in a group, and when I like the top weightings of the ETF, which I do in XLE, because you have Exxon, Chevron, and Conoco as your top three positions, all names that had good earnings. That sometimes I just trade the ETF or pay more attention to the ETF, especially when you have more volatility, on the tape. And so you kind of look at this, and this closed back at the 20-day moving average. Again, maybe shaking out some of the weak hands in energy, and we'll kind of see how this goes. It did close above the 20-day moving average. But again, I think that even more than this, digestion after being the top performer, I wouldn't be surprised at that either for a bit. So it'll be a sector to continue to pay attention to. That was nat gas. Sorry, I'm jumping ahead. That was crude that finished just barely positive for the day, and nat gas finished up 6% while still in the range, still in value for the month. So again, we'll come back to that because that has been such a popular area. And it fits right into that kind of value, value type securities or areas that the market does like right now. All right. So that was another story of the day. NASDAQ week and the cryptos week. So we can look at NASDAQ futures. We're coming into a place that it should, if this market is going to have something to it, and if it's not just another bear market rally, the NASDAQ is going to need to hold in here. 11,544, that's the top of value for the month. Now, of course, there's some other things back in here like the 50-day moving average, the 20-day moving average. Sorry, this is the 20-day moving. I had that backwards. This is the 20-day moving average, and this is the 50-day moving average. So these things are going to need to hold, and even better, the top of value. And if these things are going to bounce, this would be a very good place for them to bounce because we've now had a pretty decent pullback from the highs of last week. All right. And then if you look, not to put these two together, but sometimes they do move together. Bitcoin just does not look very good here. Look at what, we've talked about this chart, right? We talked about the breakdown through this very slim value area. We talked about the consolidation and at least a few of my recent videos. And now this is beginning to break this. And I thought this looked like, I put this on Twitter as well. I thought this looked like a bear pennant. It is now breaking the pennant to the downside. Right. Also, this is confirmed. This opened up. Of course, these are Bitcoin futures and not Bitcoin. The actual Bitcoin. These are futures, but this opened up Sunday night and below the value area for the week. And then also check. This try to break in and kind of turn, which is basically what happens a lot of times. What we're seeing is things will kind of digest. And it's even like another mini consolidation to the downside. So, it's nice that, if you're playing this to the downside, it's giving you confirming signals on multiple timeframes. And I like to use multiple timeframe analysis. 16,145 is your resistance to the upside, but I think this thing is headed lower. Where this ends up going, probably at least taking out those lows. And then further down here, I think even like 11,000 is really the next stop when I look across time frames where Bitcoin could be headed to. There's too much, there's too many things that are going wrong in this space right now. So in any event, I could spend another 5-10 minutes, talking about Bitcoin and all the headlines and everything else that's going on, but I won't do that. One other thing that was also kind of risk off for the day was the US dollar. Now the US dollar is still, it kind of recouped the 5-day moving average, but we're still below the 20 and below the 50. This is, I do think that this could bounce. even a little bit more, but it would still look like the trend is broken to me to the downside. So regardless for the day, up 90 basis points is a pretty big move. Some of that having to do with, China and the COVID situation. So where does that leave us? Those were the themes of the day. Let's just go. I brought up the NASDAQ. I also just want to go over the S&P, which continues to kind of move sideways and a little bit now to the downside. The 1 hour value areas will kind of give you a sense again of what's going on here. For now, this is holding in here. You could see that you've got a couple of these candles that they tried to rally, and when you see these wicks on these candles, to me it just means that there's I hate to say more sellers than buyers, but there are more aggressive sellers that are not wanting this to rally. So could this rally tomorrow? Could we rally the rest of the week? It's definitely possible. The fact that we're holding 39.54 says that it is possible, and the price action is starting to get very tight here. So I do think that we have a chance to kind of move decently. I don't think there's much on the radar for tomorrow, but Wednesday we're going to get a whole slew of economics out. So if we don't move, if by chance, if we don't move tomorrow, because we're only really getting the Richmond Fed Manufacturing Index, but look at all the information that comes out on Wednesday. You've got durable goods. You've got, sometimes this happens during a holiday week. They throw a lot of the economics into one day. You've got durable goods, cap goods. You've got initial jobless claims. You've got the manufacturing PMI and services PMI, and you've got University of Michigan sentiment. That's comes out at 10 o'clock. And then don't forget, we're going to get Fed meeting minutes at 2 o'clock. So perhaps one of these could really get the market to move and get out of this range. So, rather than guess which way it's going to be, watch the levels. 39.54 again to the downside. And notice that we've been kind of floating along this 200 period moving average. If this breaks, right, then I think you have some opportunities possibly to the short side. If it holds and we kind of move, if we start to kind of pivot away from this, then maybe you could see a move back up to 4,000, right? Which we know was a resistance area last week. But for a trade, right, that's what I would be looking for. All right, that's kind of a little bit of the plan regarding those minutes for Wednesday. I'll give you my outlook for the minutes. I mean, I think what we're hearing, and we had a couple Fed speakers today too, they're going to keep these expectations really low. They're really kind of going to dance around the issue of how many more rate hikes. They're all seem to be saying that there could be more rate hikes. Remember what their job is, right? Is to they want to see inflation come down. Don't forget, before the next Fed meeting, we've got another CPI report that comes out right before that Fed meeting. So, of course, they're going to want to keep expectations really, really low. They want to keep the market down, until they've got more evidence that inflation is moving to the downside. And then they can possibly pump the brakes on raising interest rates if they get, and if is a big if we get another inflation report that comes down lower. What I thought was also interesting today was Germany, and again, just one data point, but we really haven't seen inflation back off in Europe. Like the inflation reports have been higher in different European countries as well as the Eurozone. It's been higher there than it has been here. Look at the PPI report that came in 4.2. Now their data points are a little bit different. Like their last CPI report came back, all for whatever reason they don't put these reports out together. Again, this is just Germany, just one country, but this was all the way back on 11/11. This is 10 days later we get PPI, and it comes in much more negative than expectations. So perhaps maybe these things are starting to trend down. We'll see if we get more reports. And again, maybe that next report, which again, just put the US in here, tells me, and I'm getting to the point, let's put in 1220. right? So the next Fed meeting, whoops, the next Fed meeting, yeah, we got a CPI report on 12/13, and then the next Fed meeting is 12/14, right? What this tells me, right, is to be patient, right? With overall, making trading decisions. Of course, day trading is fine. I'm doing small swing trading, basically. I'm swing trading things like Bristol Myers today because, here's the XLV ETF, which we talked about. Was kind of one of the better looking sector ETFs that could maybe break to the next level, maybe 136, maybe 138. But going back to the couple names that had good earnings, Bristol Myers was a nice trade for me today. Again, doesn't move that much, only moved $1.50, but still on the right side of the equation, which is right now, winning. SHLS, remember, was a name that we talked about last week. Again, this is point A to point B. Where was I going to take this trade off, or at least watch what happened? Was around this 32.20 level. Look at what the stock did after it took out this virgin point of control, right? It faded. So, this was a nice trade from last week. Take it for a couple bucks, put the money in your pocket right now. that's the strategy in this market for now. All right. And then we'll see if it can get above, notice there's another VPOC up at 38. But now for me to put a new trade back on, I'll need to see this get back above the, that virgin point of control. Again, virgin point of controls are where a lot of buyers and sellers, a lot of volume previously, where we've met up before, and where we haven't revisited. Okay, so that's the story there. Then a couple other names like, hey, if trades aren't going to work right now, I'm going to take them off pretty quickly. CPNG got my first target in this one. This was a small trade that I put on last week. Notice again, it's not finishing anywhere near the high of the day. So smartly to, in my opinion, to take a profit target and then look again to see if we get something else. Here was MOD. Let's see, where did this MOD? I mean, this thing finished down 2%. It could hang in there. That's a lot of things that, I'll go over a couple other charts, things kind of coming into support, some of which are probably going to hold, some of which may not. Monster, but consumer staples were very strong today, even though I don't really understand how Monster is a consumer staple. It did break out to new highs. That was a name that I got long on Thursday. I actually took it off and I re-added it on Friday, got it to work. So very good. And then I try to kind of, I also got rid of pins, right? Let's talk about a couple losers, right? Not just winners. But pins is just not showing me anything. Now I've waited for this to kind of rebound. Now it may hold in here, but I don't want to see it back inside the value area. And again, I don't want to get bogged down with trades that are just not working. We've seen this thing get to 26 now a few times, and it just can't get through it. Now, it's not breaking down either. It's still above the 200-day moving average. And maybe if you really have a lot of conviction in this name, then maybe it's something that you can sit with. For me, I don't have a lot of conviction in this name. I'm basically, was looking for a technical break higher, or at least for it to kind of hold in here. And, to see it down another 2% after 3 or 4 days down in a row, it could definitely bounce back here. But again, it's not giving me enough, it's not selling me on why I should be in the name. A few other things that I thought were interesting. I did start, here's where I kind of start a couple positions, into things that I think are a little bit more interesting. AEHR almost closed above Friday's candle, still holding the trend. Dips get bought in this thing. I'm happy to kind of add if it comes down a little bit more. SMCI, was down today. I just feel still, even though some names like pins and other names in growth are not acting very well, there is a group of stocks that are acting pretty well. Now the question is this thing going to come into the 20-day moving average? It might, but for now, I think that this is a really strong name, and I started a position even though it's a high flyer in this thing. So again, starter in that. So again, I continue to kind of add some risk, mainly in growth. I'm picking smaller positions because they're just a lot harder trades at this point. But there are certainly some opportunities in, in more of the value areas, like even something like Walmart today, right? I think Walmart ends up, going, where do I think this stock goes? I don't usually trade this name. I didn't trade it, but I think it ultimately goes up to 154, right? A couple names that I'm watching for tomorrow. I mentioned some names are kind of coming into some support, like Wingstop had good earnings, right? This has been kind of rolling higher, 1, 2, 3, 4, 5. Notice it's above value, not inside value. So it's still trending and it's into the 20-day moving average. I'm definitely watching that one tomorrow. And something even like a CEG will be something, has had at this point a decent amount of consolidation. And I think that this can maybe punch out and start to take that next leg higher. So again, there's definitely some things. We might as well talk about Zoom a little bit after hours. Even a name that has gone down this far, and a lot of growth managers have been adding to this name. Again, I still don't think that this is a great name. It's a stock of that did very well when there was shutdowns, right? And stay at home type trades. That's not the environment, right? The stay at home. So, the other thing too is like, think about fundamentally what gets you excited about this company. We were having a conversation in the trading room about this, but I'm using Zoom right now, right? So it's something that I'll continue to use, but where's the growth? If this is a growth company and an innovative company, right? This is the top name in the ARK ETF, top weight in the ARK ETF. What is innovative about this company? Have they rolled out anything new that's really, really gets you excited in the last 2 years? I don't see it. So, this is more like almost like a utility tech company. It's not innovative anymore. It was innovative a couple of years ago and right at the right time when they're stay at home. But where are they going to get their growth from? Where's that new innovation going to come from? I don't see it. And here is the trade that I suggested because the options were pricing in. The options were pricing in, and note they've fallen 7 of the last 10 quarters. I always go with the trend like that. And I said, if I did not trade it, but I said the trade idea would be to sell a call spread and collect premium, considering that the implied move is 13%. All right, guys, that is it for today's video. Have a great night. See you tomorrow.